Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Hope you're doing well on this Friday. We have new all-time highs in the market, and as those of you know, have been following the Trader Lab. We've been anticipating that and trading from the long side, and I'm going to be going back and reviewing yesterday and how that set up today's potential trades. And like everything in trading, it is not about predicting, it is about understanding and anticipating market behavior and then getting into alignment. We're going to talk about that. And the Trader Labs, you understand, is a community of like-minded traders who come together to leverage their collective experience. This is about the business of trading. This is about understanding how to integrate Bookmap OrderFlow tools with auction market theory using the volume profiles, the chassis, to overlay structured trades on that have a statistical edge. This is not a gambling business, guys. This is not a make-it-up-as-you-go business. That's entertainment. You can get that in the casino, get the cocktails and the ticket to the buffet, because that is entertainment. The business of trading really is different. We have to approach this as a strategic endeavor and a endeavor that is actually statistically based or based on an edge. So an edge is really putting the odds, if you will, in your favor, but also acknowledging you're in a random environment. And the successful business model that this is built on top of is gaming, or the way casinos operate. So everyone, when I started in the business in 1980, I was the commodity business back then. It wasn't futures. Primarily, we were trading commodities. And it was, oh, you're a gambler. And I said, no, I am not a gambler. What I didn't understand is I was the gambler. I didn't understand the business because back then it was measured moves and predicting where the market was going. So it took me many years to figure out that, yeah, I was a gambler and that I could not anticipate or expect to stay in the business by gambling in spite of having winning trades. So over the years, I had to try to figure out why I wasn't consistent in spite of the winning trades. And it was always, oh, let's make it better. I just have to make it better. Well, the problem was I had a defective process, and I was trying to fit the process into my psychological needs, which is to be right, to predict, to avoid risk, right? Create certainty. And in your mental, call it your mindset, are you saying, I'm looking for confirmation? I want to squeeze the risk out. And that was my perception. Let me squeeze the risk out. I'll have more winners. Well, the reality of gaming is you can't squeeze the risk out. What you can do is only operate with a statistical edge and accept the risk. And it's very different. So let's get into this. Let's talk about this. And let's get into the trades for today and the context. The market is based on the condition of the market and then how we operate in it. That's what trading with structured trades is all about. And like everything, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get there, we'll talk. On the other side of this, the goal of this stream is to help you understand how the market develops and where structured trades might come into it and how you can get an alignment. And then if you actually have an edge with a specific trade, which means a random outcome in spite of it all, can you build out a business plan and then actually, in spite of paying the other side, in other words, stops, which, and remember, the casinos pay the gamblers, so overhead and cost of production, can we be profitable in spite of all that? Well, that's where plan, discipline, and metrics come in. Let's go take a look. And thanks again for visiting the Trader Lab. Hope you get something out of this today. Now, I'm in Mexico. I'm on a lot tapped, so you're going to have to be forgiving because things can get nasty. The Bookmap Academy has changed its session times to Tuesday at 4 p.m. Eastern Standard Time. Those of you looking for coaching, it is available. Bruce's pilot program, he can help you show how to get edge. Now, whether or not, and everybody has different ways of approaching the market. Bruce is an order flow expert. You can get a better understanding of not only what you see in Trader Lab, but also other ideas and nuances about using Bookmap or as an order flow tool. I call it the tip of the spear. And also he can help you understand what is an edge and maybe put some tools together to begin to extract that so you can move away from the gambling and step into the statistics, which is really what this is all about. And then for the month of October, if you're a Bookmap subscriber, you can win 3 months of Global Plus for free, $600 value with data. All you have to do is take your screenshots. And if you're in Trader Lab, remember, you should be doing screenshots, annotations. How do you use OrderFlow? What were your structured trades? And drop them with hashtag Free Blue Jacket on X, LinkedIn, or Instagram. Okay, got that? Let's do it. Now let's go forward. Maybe. Got to switch screens around here. It takes me a little time. Hold on. Okay, now I have to take you back to go forward. If you guys remember, 90 was resistance. And this is the Acapulco cliff dive, the several Fridays ago, I guess 2 weeks ago. Seems like it was 2 weeks. This is where we had the 100% tariff announcement, and we're out of here. We'll catch you later. Then the market consolidated. This became support, this down here. And if you follow the streams, you know about this already. If you're not following the streams, you might want to, if you're interested in the process. This was a long, so open here, get stops here, do the Acapulco cliff dive again. Target was down here. You could have got long here or just get back in the Barca Lounger. What's sitting above here? Stops. Go up, find too high, and what do we do down here? Take out the stops. Market goes down to go up, goes up to go down, goes down to go up, goes up to go down, goes down to go up. Inside day, we coming or going? Gap, there's the gap. 90 is resistance, which we got here. Too high. Day before yesterday, Acapulco cliff dive. Where was our support? 95. That's your target. 95. This is called auction market theory. I don't use indicators. What is my indicator? Buyers and sellers, not some lagging, mathematically based, price-based something or other, which I know all about because in 1980 they were new. So I dug into all of them. And what I found was they all have random winners. So I believe that if I put a couple of them together, that somehow I would have the magic mix. Oh, and let's add the different time frames. Now I got it. No, not so much. Random winners, sure. Why do you think there's 200 indicators in your software toolbox? Do you need 200? Do you need 2? Why not just the 3 that work? How about they all work randomly? So this is too low, and this is too high. So what does that tell us? Over day before yesterday's high are stops. So the idea was this. If we hit our target down here at 95 and we come back up and close inside of where the gap was, so we clean, remember how it works. Market goes down to go up. Market goes up to go down. Market goes down to go what? And then we need to get here, all-time high here, and we'll see you later. Send me a postcard. All right, let's look at it again. This is the day before yesterday. Resistance, open here, go down, fill the gap, throw everybody under the bus, and the outside edge was down here. I'm not going to spend time on this. This is all in the previous streams. Now we have shorts in the market, and we come back in the range of the breakout. We close here. So this is excess. That's what that tail looks like. Now let's go further. Yesterday, here, this is our support, the highest volume from the down day. Remember how this operates. High volume is like shopping. If you know how to shop, you already have the basis of trading. The problem for us is in the store, your supermarket, the prices don't change. So you know what's too low. It's a sale. You throw 5 in the cart. the price is too high. There's resistance. You say, I got to have it for the tuna casserole. I'm going to buy one, but you don't like it. So there's not a lot of buyers up at the high price. This thing's overpriced. Now, you're either going to get a different product or you're going to buy it if you got to have it. But the sellers, if they want to move the volume out, which is what the goal of buyers and sellers is to find a fair price where both are happy, that's your retail price. Well, what happens in the store is if we find too low, so here's the retail price, but the sellers go, I'm not selling it here anymore. Then the price goes up here. Now, this is the high volume in this red candle. It's right there. Then yesterday, the fair price is there. Now, yesterday we come down, and what happens if this price is no longer fair? Well, then we're going to go back to the previous fair price up here. Oh, on sale, I'm not paying that, you see? And what does that suggest? North. Let's go a little further. Now, I'm doing this because I want you to understand how the market works. 37 was and this little orange line is the fair price. I opened, I tested, and it's like, no, sorry, Charlie. Remember Charlie the tuna? Now, where's our stops? Remember how the market goes up to go down? So on this day, it went down, and we closed here, fair price. We open, right here, and it's, sorry, Charlie, too low. Where's my buy stops? Here. What do? Sorry, thanks for playing. And the next target was this high, right here. Remember the 90? Now, let's take a look at today. Gap, north, now. This sets up everything. And what it is, this is called context. Context. What is the condition of the market? New all-time highs. Let me ask you, do you feel lucky, as Dirty Harry used to say? Do you want to fade this thing? Or do you want to get in alignment? This is the magic of the auction, is to understand the condition of the market. Now, I've marked some levels on here, but I want to show you how this thing works. First of all, and this is what's pretty cool. This is the RTH all-time high. This is the ETH all-time high. So when we open, got to figure out where that is. Hold on. Where is the open? Whoop. Must be covered up. Guys, where's the RTH open? Trader Lab, can you tell me where that is? Trader Lab, where's the RTH open? $21. Cool. Thank you. So the RTH open, is it 21? Guys, would you confirm that? 21.12? RTH, guys, 21? Wow. Okay, let's look. So the first thing I was anticipating, okay, let me get over here. RTH open. RTH is 8:30 Central Time. By the way, I'm in Mexico, and if things go bump in the night here, I will do my best to get back. Seems like the internet's okay over here. Let me try to get this. So when the market gaps, and new all-time high, the possibility is to get what's called responsive selling. Now, let's take a look at our grid sheet. This is how we kind of put our plan together. What are we doing? We are opening out of range. So there's a question that happens here. Higher, outside of range. So I'm going to have statistics. Everything you hear from me, no matter what, or anybody else, you have to vet. That means you got to make sure it's accurate, and you also have to make sure that it actually will work for you. And it isn't just somebody cherry picking, anything. You know what I'm saying, right? You've all been there and done that, right? So we are long from the ETH. So right there, if we're opening in a gap, then the possibility is we're going to get something called rebalancing. In other words, the longs from the ETH, who are now got the champagne on ice, in the gap, that we may get their profit taking. That's where that inventory might, remember what I'm saying, might, because maybe's all you got, might rebalance. So that's the first piece. So then the market is out of balance. That means that we're not in a fair price anymore. We are rejecting the previous valuation, which is below us. So we're rejecting what's below us, but we also have longs. So we have longs in the market. So we may get what's called responsive selling. In other words, I'm responding. So I respond, I take a profit. That gives me the potential for downside rotation. Is everybody with me so far? If the market is responsive, then what? So if I get that responsive selling, what do I know? I know that the ETH all-time high is right there, and I know the RTH all-time high, wait a minute, is there. Let's go a little further. I know the ETH mid is there, and I know the overnight volume point of control is there. So what does this all mean? What does it mean? Overnight volume point of control is where the highest volume is from the last auction, which is the ETH. Yesterday's high, the gap, so we have a gap, we have the ETH low. Oh, there's another little piece here, just to keep you honest. This is yesterday's volume point of control. What are these volume point of controls, Tom? Great question. Hold on. Whoop, where'd it go? Hold on, losing mind. Have to get it back. 74, 70. Yeah, here. This, let's look at the auction, because this is the truth of the market. Now, if I sound that I'm a little dogmatic, I'm sorry, accept my apologies. This is not complicated. Trading is random. That's what's complicated. This is the language. So I'm not using indicators. I found that if I just listen to the participants, I might have an edge. What does it say? See, if you have to interpret, what does this mean? Well, we took the stops out over this high, and the previous retail price was here day before yesterday. Too low. Off we go, right? Ding, 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 up, 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 up. This was too high. We took it out. Okay. So there was resistance, and 90 was another one. Now this is the new retail price, 74. Follow. Now, let me get this out of here. I'm showing you how a way to understand what might be happening. This is the retail price that I just showed you from yesterday, 74. What is that 74? The ETH low. Too low. Language. Shopping cart. Back to the cart. Too low. Yesterday's high. RTH open. Gap. Uh-oh. Where do I fill the gap? Here. But where's my overnight volume point of control, you ask? Where is it? I think I lost. Oh, it's below. Hold on. Losing it. Too many pieces. So I know I'm in a gap. I know that I tested the ETH low. I know this is the retail price, and I'm opening above the previous all-time high, ETH and RTH. I'm above the mid, and I'm opening over here. And what's going on? ETH high is here. I'm opening in a gap, out of value, out of balance. Now let's come back. All of this is before the first trade. This is the point I want to make. I already know the condition of the market. What I don't know is that responsive selling on the open, those profit takers. This is what I don't know. But what I do know is yesterday's high is here. I could fill the gap. Who knows? The ETH fair price is here. I don't know. And I have my RTH all-time high and ETH all-time high. That's what I know. Now I'm ready to trade. The only problem is, where do I get long? Right? Are you guys with me so far? By the way, the chats disappear. I'm on a laptop, so I lose the chat. So please be patient. I'm going to try to get them back. I hope you guys in YouTube, thanks. Appreciate your patience today, and also TraderLab, because everything disappears on me. How we doing in YouTube? Please give a like. I hope you're getting something out of this. welcome to the Trader Lab. Let's go. So I'm looking for a long. Now, looking means the trend is up. I am not interested in shorts. Everybody else, knock yourself out. It's okay with me. I want to get aligned because I trade. The idea, at least, is because I take stops. You do, me too. I take stops. I'm okay with that. But the way I get paid for taking risk is to catch the larger rotations. You can talk to anybody you want about scalping, the short-term rotations. Find out if they actually have sustainability in the business. They'll have a good time, but this is a business of risk reward, not action. This is not a video game. You can play a video game. I'm going to say keep metrics, find out, prove it before you do it. So let's take a look. RTH open. Remember where my all-time high is, ETH, RTH. Liquidity is resting here at the all-time high. So I'm looking at this, and this is something I made up. It's called VPOC migration. The first, and I labeled some of these because I was narrating this. This, and you'll see what this is. I do this every day. This is too high. It's resistance right there. Migration shifts down. Migration shifts down. This is the retail price. We're back in the store. The little consolidations are like your mini mart down the street. Call this multiple time frame, except I don't use time. I found that time is a restrictive process. It's a rigid structure that we created. The thing is, the market doesn't operate on the clock. There's no market person standing there with a stopwatch telling you, you can't do anything here until 5 minutes, 1 minute, or something. So what happens here? Sellers are here. There's the delta. Buyers are here. If I break below it, it means these guys are in control. So I had my sellers, remember, responsive selling. Sellers, I'm taking a profit. Buyers on the gap. These sellers were consumed. There's the iceberg. I'm just giving you a little something to look at. Resistance is right here. So I know when it comes here, I'm waiting for a long, and I don't know where to take a long. Do you know? I don't know. So now this is too high. That is too high. And my new retail price or volume is here. Remember the shopping experience. If I break low, now I have liquidity here, I have absorption, and I rotate. Now, I'm still completely clueless, not ignorant, clueless. There's a difference. And sometimes, it's like, it's about alignment. Let's look at the language of the market. No indicators. I speak market. This is like playing a musical instrument or a foreign language. So this is a language of the market. So you guys use indicators. I got nothing against them, except that most of you are using indicators and you're not learning about how the market works. You're depending on your indicators to interpret it for you, except they don't know what's going on. So they're just giving you one piece. But you need to actually develop an understanding of what's going on. The sellers are here because the buyers are being absorbed. Why did the market go down? Because there's absorption here. The passive side. You can't see the passive side. When you see delta, those are the aggressors. If I get an aggressor and the market goes down, that means that they were met with sellers. And it's like Pac-Man. It's going nowhere. Down it goes. Sellers are below the buyers. VPOC migration. Let's watch. Got to do this. Got to keep up. So what I'm doing is I'm going, where's my buyers? Yet the trend is up and I'm at new all-time highs. Do you feel lucky, as Dirty Harry used to say? Do I want to get short? No. Am I going to take a short to try to fill this whatever? No. Are you? Good luck. Might be the trade of the century, and you deserve everything you get. Now let's watch. Remember, right here, this is the previous all-time high. How do you see a gap? Well, now, right here, I see absorption. I'm finally seeing absorption. I have a seller. I got less sellers, and now I rotate up. So right in here, I'm starting to get a little itchy on the trigger finger. This is resistance. Watch. See? What? Let's go back to the store analogy. I'm not paying that. Break away. This was my retail price. Watch. Well, look where it is. Now, the developing volume point of control shifts here. New retail price. I get my buyers here. Now, there's a couple possibilities, of course. If this is too low and this is too high, this is my resistance in the store. Your shoppers are going, I'm not paying that. That's resistance. Now, if I clear it, that changes things. But right now, it's resistance. So I come up to mid VWAP. Now, what do we know about the mid and the VWAP? Mechanical retail traders. By the way, write this down. Think like a retail trader. Don't act like one. Come on. Too high. Too high. So I get my mechanical sellers. Oh, I'm going to sell the mid. It's going to zero. Okay, maybe. They might be right. I have no idea. Do you? But what do I know? What I know is I got liquidity sitting at the RTH all-time high. So I'm looking at this, and I have a gap under me, and I'm clueless. And again, not ignorant. Watch. Here, I'm seeing my sellers. These buyers are being absorbed. By the way, this is micro. I like to do this so you can kind of see that I'm going to do the same thing in multiple time frames. How are we doing in YouTube? Anybody fall out of their chair yet? And don't hit your chin on the desk or the keyboard. Right here, I see the absorption. I'm at the ETH all-time high. So right here, I'm going, I truly am, because I want to get long. But is this and this the same thing? Aren't they? So I have a consolidation. I've got sellers here, and here's the absorption. Right here, as far as I'm concerned, I'm going there. Watch. Change right here. Now I see my buyers, and this rotation is the highest, largest up rotation. But where's my resistance? Isn't it there? Watch. Resistance right here. Now, watch. This is resistance. Watch. Now, clueless, ignorant? No. Clueless? Yes. This is a long. See it? Long. Why is it a long? Let's talk about this. Buyers are here, no clue, right? I know my buyers are here when I see this. Right here are my buyers. Now, I don't know if it's just this and then that, right? But when I see the change, and this is the largest rotation. Now, where was my resistance? Wasn't it right there? You see? Because that's resistance. That's why we got that. But what happens here? This is resistance. Absorption. Then it's either this to this to this, or if I get over this, I get long. Watch. There's my break. This is a trigger. My support is here. Break high, support, entry. Entry. Oh, and where's my other resistance? See it? Look, right there. Pull back. This is a long. And why would I get long? Trend is up. Tested the ETH all-time high. Found my buyers. No clue. Change. That's the long. So that was the first trade. VPOC migration. Label it. Going to the moon, Alice. Maybe. Watch. Now, liquidity. Now, the ETH high, let me give you some statistics. And don't forget, we're in a gap, and as far as a new all-time high, and as Dirty Harry again would say, do you want to fade this? Me? Not so much. You? Whatever you want to do. So I opened higher outside of yesterday's range. There's a 79%-ish probability to get to the ETH high. Well, all things considered, I'll pick that one. What about you? And of course, you have to vet all these for yourself. As it stands at the moment, And there's a 62% probability to take out the first hour's high. Let me see what else I got here. And then after that, we have to put our helmet on. And there's some other statistics in here, but I'll leave it at that. So too low, long, what's this thing? VPOC migration, VPOC migration. Now, in a directional market, how do you get into this thing? Well, this is the long, but that's besides the point. Let's say you're asleep here and you're getting your coffee or you're snoozing and it gets away. How do we trade it now? Do we impulse in and FOMO? What do we do? Well, in the Trader Lab, we have specific trades which are, continuation trades. Okay. Yeah, Adam, I think I just went over that. If not, I'll answer that for you. How do I compare this open to others? Hold on, Trader Lab. Hold on in YouTube. Hold on. Okay. Alan Roger, I don't really understand it. What exactly our liquidity level? Is it limit buy orders? Yes, typically. Liquidity is often icebergs. It's really just reflecting the depth in the limit order book. And then we can see that like this here. The thing you don't know about, like, for example, this one, is are they going to pull or transact? Now, you see this green bubble? They're selling, and it's Pac-Man. The buyers are absorbing these icebergs. And if we get through it, it can often act as support. Doesn't have to. Now, back here, VPOC migration. This chop says now there's more volume here than there was down here because we left this. Think of this as a balance area. In other words, too high, too low, high volume. If we leave it, remember the language of the market, no indicators, too low. Now, the new price for S&Ps so far is here because there's more volume. Sellers, buyers. If I break away from it, now this is resistance, and I can consume it. Buyers get above it, it might be support. And now I have new retail price. So what do I know? Too low and too low. All right. So now let's watch what it does. So the first long is this thing. Okay. So you're having a wonderful time back in the Barca Lounger. Now, what do we have here? Now, the thing to understand here is that what is the condition of the market? The condition of the market. So we're rolling along here, and these areas are called distributions, and basically they're a distribution of volume. Think of it like the retail price. Oh, it's on sale. I'm not paying that, right? Shopping, store. And then down here we had a store. Too high, too low, retail. Too low, I leave it. I go to the next store because now you can't buy an S&P over here. Rotate, and either I break away or I fall away. And we don't know, okay? No way to know. So here's what I know. This is a previous retail price that was too low. I have my mid and my VWAP out here, and I have an outside edge or a low volume node here. And a low volume node is where the market didn't spend time, and it's created by the acceleration. So the market has a tendency, if you get acceleration in a low volume area, to come back because it's not auction. It's like, we're out of here, get in the car, go to the next store. Oh, they're sold out. See? But because of this, it's not auctioned. And it's almost like a gap because the auction needs the chop, find too high, too low. When it doesn't do that, it's poorly auctioned and it leaves low volume. So low volume is like an outside edge. So it's almost like if that's a retail price and you don't know where the outside is, you didn't think this would be easy, did you? It's either out here because that price is too low, or if I come further out, maybe this one is too low. And I couldn't tell you which one. I don't know that. So this is part of the thrill. So let's look. Notice where we come. Here, too low. Now, I was looking at this one, and I was saying to myself, and this is called mean reversion. Underline the word mean. Remember, I have this. Don't forget that. So I know I can come out here. I know there's going to be stops and potentially buyers at the VWAP in the mid. I know that, right? You know it. I know it. I know this is my outside edge, and I know this is my fair price. So the only trade I have, and in this configuration, is longs. I have me. I'm not talking about you. In my time frame, I want to align with the dominant side. I'm not interested in playing games. I'm interested in profit. Sorry, but that's me. So it's not a video game. And it's also, there's nothing wrong with getting short if you want to fade all new all-time highs. That's your business. It's not mine. But I have an edge, and my edge is better aligning with the trend than fading the trend. And it's not that you can't, but if you don't know your probabilities of outcomes, then you're just gambling. And over time, make sure you get the cocktails and the ticket to the buffet. So, because I always think I'm not here to play a video game. I'm really here to extract dollars from the other participants, the gamblers. So, and again, we have to define what's a gambler. So right here, now there's a problem with this trade. Let me tell you what it is. I looked at this one, and I can't enter here, which is the location, because my obstacle is this. This is called mean reversion, and I'm not outside. I looked at this, and I said, well, this is a reversion trade, but I can't enter here. If I enter here, this is my obstacle. I got to get scaled. Well, this is a problem. So let's see what it does. See? So this trade, so what I do is I narrate. And again, I'm only talking about me. I'm not talking about you. I'm just saying, hey, this is what I do. I don't know, And what I share in Trader Lab is just a process. You adapt it to your time frame as you think of time. I don't think of time. I think of rotations. And remember how the market works. The market goes up. Remember what I was showing you at the top of the stream, to go down. The market goes down to go up. The market goes up, and this is a sweep. This suggests down, to go down. And why is it rotational? Remember what I showed you at the top of the stream. The market rotates because there's stops on the opposite side of these swings. So anybody who sold here, if you got a short, who knows, buy stops are here. If you got a long, sell stops are in the leg, you see. If I get a short here, I'm going down on the sellers in here, okay? That's how I look at this. Here, there's sellers in this leg. So there's buyers in here. So you get sellers with buy stops, you get buyers with sell stops, and the market rotates, all time frames, okay? So I know if I get long here, I'm going to go up on these guys, and I need the range to qualify the trade, because that's my obstacle. So this trade didn't qualify. But if it was further outside, this is a long. All right. So it has the behavior of the auction. It doesn't qualify for the range. Does that make sense? And by the way, this is not mechanical. This is behavioral. There is a difference. Now let's look at the behavior of the market. What does it say? Let's come back to our language. Too low, too high, going to the moon, sweep, seller. This is a reversal process. Now the joy is to where? Random. So let's get over it. Random. Where's my outside edge? It's here. So what I know, let's talk about what I know. Buyers were here. My outside edge is here. What's an outside edge? Low volume. What created that volume? You see where I'm coming back? Here. Why is it important? Not auction. What does the market tend to do? Let's check that out, Lewis. What happens over here? Buying icebergs, absorption. Now, I have a challenge. Here's the challenge. This is my retail price, and this is my resistance. And next piece, I got to mark this here. I can't forget to do this. It's a sweep. So that's material. This is resistance. This little, hold on, guys. I got to turn some things off from my Investor RT. I'm exporting levels from Investor RT, those HVNs, but we're not, that's the current representation. And I don't want to be in the current. I want to be where we were. So these are going to disappear. So it's low volume. So this is the low volume area, outside edge. So if I come outside, now let's remember the shopping experience. I have my sellers here, mini mart right here. Buyers are here, sweep, sellers are there. There's your icebergs. There's my sellers. See the change in behavior? So the buyers were, so what I'm doing is I'm isolating auctions. You see this here? These are inside each other. Think of a Russian dolls, vertical integration, a time frame. And I spent a lot of time yesterday talking about vertical integration of multiple time frames. Watch yesterday's stream to get a kind of a sense of how these things integrate. Because you guys think of multiple time frames. I just have a little different. I look at it as a vertical integration of behavior. So the clock is not really the issue. It is what happens right here. What time is, how long did this take? I don't know. You see? Does it matter? No. What matters? Sweep. Buyers were there. That's why it's going up. Why is it going down? Sellers are there. Sellers are here. Sellers take control. What's the language in this quote time frame? That retail price, high volume, is too high. It's too expensive. Now, when I go to a higher time frame, the developing daily time frame, this yellow line is the fair price. So too high, this is retail. And in a rotational market, which is this kind of a thing, this is the trade that's qualified in the Trader Lab is called mean reversion. Mean reversion. Where's the mean? It's there. What's the trend? Up. What have I done? Check the ETH all-time high. I already know where my trades are. Here, which would be reversion, outside in. I call it the bread and butter trade. This happens most of the time in the market. Why? The market's rotational and it's auctioning. Remember the auction. What's on sale? What's fair? What's too high? And we have a statistic, you didn't forget it, over 90% probability to take out the ETH high or low. And I don't know about you, but I think the ETH high is on the menu, and that's about a 79% probability. Again, past performance not indicative of future results. Why did I take a short? I will trade manage, but I will not take a short. You knock yourself out, and it doesn't mean you won't get paid. Everybody does randomly. Me too. So if I come outside, I'm looking out in here to get long somewhere. Don't know. There's the open. Remember this. So as long as I don't fall out, this is my area. Let's look. And my goal, and it's the mid and the VWAP. So if we're in an uptrend, I might get up buyers, long buyers, I should say, and there's going to be stops at the mid. So I know a couple of things. I know there's stops at the VWAP, mechanical retail traders. We need those guys. There's going to be stops under here, right? If you were long, would you trail your stop here? You and 10,000 other people. I'm not going to get long in front of this. I want the stops to come out. Then if the icebergs are consuming the sellers, those are sell stops, and those are the buyers, icebergs, taking the other side of the liquidity. I have to see if the absorption stops the sellers, and then I can get long out here to come back around in alignment, and my resistance is going to be up here because that's where my sellers were. So let's just see what it does. This sets up your long. your outside edge, low volume node. Now there's a challenge with this. Let's look. Right here, sellers, I'm seeing my icebergs, clueless. Does everybody agree I'm clueless? Come on. Am I clueless? Yes. What do I know? Right here, nothing. Here's what I know. Watch. My sellers are here, and I don't know anything. Looks to me like it's going to go to zero. Look at the structure. Now come, follow. This is the auction. What I am doing is, again, I'm not using an indicator. I'm letting the participants tell me what they think of the price. Right here is an auction. This right here. Chop, 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 chop. Sellers, buyers, absorption, clueless. Right here, going to zero, change. Right there. Right there. That little node sticking out, which is, watch, there, retail price. And what else do I know? Let's come back. Low volume area, not auction. What does the market tend to do? Lewis, what do you think of this? Nah, too low. Where are we located? Here. I already know it's there. So when the market comes down, and what is this called? Mean reversion in an uptrend. All I can do, unless I really don't like myself, which I do like myself, is get long unless it fails and the structure changes. So for me, it's longs. Now, here's an element for you. How do I get long? Tom, where do you get in this thing? Let me show you. Where's the behavior change? Location, location. Think real estate. Going to zero. Break high. Trigger. Where's the volume in here? It's right there. That's like a volume point of control in a short time frame. This is the volume point of control in the higher time frame or developing daily time frame. So this is retail, and in here is retail. This is called mean reversion. Now, this will get your brain twisted, so you got to be patient. That's the mean. That's a mean. So if I go there, I can bounce. And if I return here, I can bounce back to there. And then if I get over this and the trend is up, I can go there. If I clear this, I can go north, and I got to remember my resistance is sitting up here. There's the node. Watch. Where's my support? Right? Where's my resistance? Here and there. Sweep says counter rotation, same as there. Watch. Resistance. Watch. Now, watch. We come up here, and I'm going for this. Don't forget, what's my probability? 79%. Past performance, not indicative of future results, completely clueless. Now, this was, let's go back, resistance, right? So if I get long here, I can scale there, and I know I had my sweep and my sellers here. I can scale there. Break here. Where's my support? Isn't it now here? There. Fair price. Resistance. Sweep. This says up. Sellers are absorbed. Support is here. Resistance is here. Break high. Support is here. Going to the moon. Right here. Now, chop, chop. So far, there's been basically too long. Okay? Sellers are here. This, watch this right here. See this liquidity coming in? This is where my teeth start to chatter. Because why is that? What's that liquidity doing? And notice the response. As soon as this comes in, look at the change in behavior. This is where order flow. Now, the thing about order flow There's nothing mechanical. Wouldn't it be joyous if we said it's going to do this, it's going to do that? Well, I don't know what it's going to do. So I'm not in the business of saying it will do something. I'm in the business of saying maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do any of it. So let's come back. What is this condition? This is a normal variation day developing. It is not a trend day, even though the trend is up. A trend day is when it's like the galloping gourmet, if you ever heard of that. Higher rotation, higher, higher. It's going, I don't know what it's worth. I can't stand it. I'm out of here. I'll call you later. Well, it's not doing that. What it's doing here is it's rotational, making higher highs. So I can keep buying this thing on counter rotations. Also, subject to my time frame, and this is where you have to determine, your thing. How do I manage this? Well, if I'm in a rotational trade, I can be trailing my stop, and I understand that I'm going to be stopped out. I got to accept it. I also know in a rotational trade that when it comes outside, I can buy it to come back to the reversion. In other words, mean reversion. So the long down here was reversion, coming back. If it comes, wherever it comes, I can buy it to come back. I can also get thrown under the bus, take stops like you do. What's unusual about that? Don't we all take stops? So let's come back. Hold on. So I want to do is I don't want to forget where my outside edges are. So there and out here, okay? Let's see what it does. Now here, I get this. Remember, something happened here. And look what happens right when this comes in the book. Now, when I see things like this, of course, I'm going, what? What does it mean? I'm trying to go here because I have a high probability statistic, wouldn't you? Now, mid, support, and outside edge. Let's look. We break below. Now here, so right here, I have the mid, and and I don't buy the mid. It's not my thing. Okay, it just isn't my thing. It's not that I don't, but I'm saying is I typically don't. So this right here, the idea of this was I got support here. The other thing I have to do is I got to look left. Now it sets up another long, but let me show you the trade that took a stop. Why? I have a variable high volume node here. So this was too low. I have this location that was created by the long over there, and this sets a long up, okay? So this one, no bueno, as they say. Trying to go there and come for this statistic up here, okay? Stop, okay? Stop. Now what? I come down, and I'm trying to get long. Now, the problem with mean reversion, and we call it mean, is where's the outside edge? Well, this is my next outside edge, is out here. So I come outside, and where's this white line coming from? Let's go back. This is where we initially got long, right? It's a variable high volume node. So basically what happened was we came outside and we broke under that support. Now we come back again. Once I break under here, where's my next level? It's going to be down here. And I don't know, I'm as clueless as everybody else. But isn't it interesting that if we come down, I have these levels. And this is what the auction is. So this was a stop, okay? I come down here again. Now let's look. Let's look at the trigger. And it's a long. And it's actually, when I get stopped out, other than my emotional response, which is probably similar to yours, I try to look at the positive aspect, if there is one. And that is, I'm further away from the mean. That gives me more range, you see? And I know the trend is up. Now, I also know, let me tell you what else I know. If I come under here, I already know I'll get long. Because all I'm doing then is taking the longs out. And if I have no selling underneath, I have another trade called the IBF, which is another reversion trade. So I know if I get long here and I get whacked, if I come out to another location and I get a trigger, which I will show you, it's right here, and why, I will get long again to come there. I also know there's the mid, there's the VWAP, and there's the fair price. The way I think is this. Think like a retail trader. Don't act like one. What do retail traders do? They sell the mid. So if I get long, I got to scale ahead of the mid because I anticipate retail sellers and a counter rotation. And they can be right. Remember, I consider them the gamblers, but for me, I guess I'm a gambler too. Except I trade with edge. They just gamble because they're mechanical. And maybe they're right. Gamblers get paid. So if I hold this, then any sellers in here, their buy stops are going to be there, right? And if I hold this, those sellers become buyers and their buy stops take me here. Watch. So, sorry, Charlie. This is where I get the coupon to the buffet. Now, remember I was showing you buy sweeps and reversals? Here's a sell sweep at a location. And I don't know, with reversion trading, how far out is it going to come? Wish I knew. Don't know. What are you going to do? This is called trading. It's random. There's my sweep. Location, location, location. The sweep puts the antenna up immediately. And the location. So, here I'm looking, but it's going down. Where's my trigger? I don't know. I don't have a trigger. Oh, sweep. Location. Right here. Micro high volume structure. Let's take a look at it. Same process. I'm going to put a little line here so we can see it. And this is what I'm doing. I'm using this because what I see is seller, 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 sellers, sweep, wait a minute. High volume is here. If I break high and this holds, it's a long trigger. Let's look at it. There's the long. There's the test. And where's the outside edge? Let me draw a little box around it. And I'm process oriented. I don't know what's going to happen. I know nothing. What I know is the trend is up. We're at new all-time highs. And I know I'm in a rotational condition, not a express train, and I'll send you a note from wherever. Going to the moon. No, rotations with an upside lean. So I have to keep trying to get long. I take a stop, I get long further outside. It makes my trade better other than my emotional response. So there's the trigger. A limit order can go here, one tick above, and your stop can go 3 ticks under here, and that's something you have to vet. I'm only giving you ideas of structure. Now remember, where do I anticipate a reaction? At the mid. So if I get long here, and I have enough range, I got to scale ahead of these guys because I'm anticipating sellers. Watch. Where's my support? Isn't it? Where is it? Come on. Watch. This is going to twist your brain, so forgive me. When I get this in this store, think of them like stores, this is the retail price. This shows me potentially that the buyers are here. Don't forget the sweep. And this retail price right there is too low. You can't buy your tuna here anymore or your S&Ps, maybe. And if it's too low, I can see it right there. And I come back and check it. I can be long here with a stop under here. And I can take a stop with everybody else. Tom, welcome. And I know the mid, which is here, that I can get mechanical sellers. So if I get long there or here, and I was going to say, what is actually going on here? This is mean reversion. This high volume in here is the mean. And what a mean is high volume. And if we're going and thinking in multiple time frames, this mean is the same as that, except this is for the whole day and this is for this. Does that make sense? Guys, if you're in YouTube, does this make sense? Trader Lab, can you see why mean reversion is the key? Are you guys tracking? How are we doing in the Trader Lab? So this is reversion trading. This is why I say if you can learn mean reversion, and I mean learn it, you're going to take stops. But this is how the market works. It is a pricing mechanism. Too low? There. But, and what's the but? Mid. What do we anticipate? Sellers. Watch. Watch. Where's my scale? It's got to be at the mid. Why? Because of that. Now, what is this? A sell trigger. Chop, 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 chop. I'm not paying that. Yeah, but it's on sale. Break. Microstructure. Where's the volume? It's there. Isn't this chop, 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 break, retrace the same trade? This is a trigger. Now, because there's a trigger doesn't mean you get short. It is showing you the sellers are here. But wait, what's the trend? Up. Where's the retail price in the higher daily time frame? Here. What about these guys? Maybe they'll get paid. They're the sellers. What else do I know? The buyers are here. So where's my support? Isn't it here? Reversion. Now watch. Reversion, another long. And now in this leg, remember what I'm talking about, fuel, buy stops? These guys who are now popping the champagne and getting it out on ice, if they were smart, which I don't know, they know this is support right there. If they are wrong, what's here? Buy stops. What's above this swing? Buy stops. What's the retail price in the higher, quote, time frame? There. Where am I trying to go? There. Watch out for this scale. There and out the top. Watch. There. Is everybody tracking? This is the long, and or a long. Doesn't have to be the long, but this is long. This is Trader Lab. And again, let me show you. What is this? A store. This is your mini mart. If this price is too low, notice the behavior. And what is happening right here? It's the same thing. Different time frame. Before I move on, is everybody following? I'm getting a question from T-Lab. What's the difference between taking VWAP to VPOC versus from the full session VWAP? Well, in this configuration, it's not VWAP to VPOC. It's mean reversion outside in. Now, if I'm directional and the VPOC is sequentially moving higher, but this is not mechanical. This is not, because we're not trading the VWAP here. We're trading the rotations. The condition of the market is this. This thing is not the gallop running away, which would change it. Outside, in. So this is the reversion. So I don't know the outside. I do know we can come out on stops. This is, just part of the thrill. So I don't know when I'm coming down here, just like I didn't know over here. This is a long, right? Took a stop. Outside next, sweep, that changes it. You see, I had absorption right at the location. That's why it went up. I had buyers. There's the iceberg. What do I know? I don't know. Come outside again. Another location. Now, when I'm putting this trade on, I'm clueless. And I have to be willing to take a stop. Right here, that's my long. This sets the long up and the location and an outside edge. And I'll remember when I mentioned to you, I said, if this trade fails, I'm already looking for another long down here. I already know where my next trade is. It would be under here And again, it has to behave maybe into this liquidity. And if I get absorption and a reversal, then it's called an IB failure, which I made the name up. I didn't know what to call it. And then it's a reversion trade. It's just an outside all the way back here. So the more abuse I get, the more range I get, assuming I'm in alignment. Now that part of the thing is assumption. Yeah? And if it falls apart and I can't get back above here, then the whole thing changes. And then I got to turn the barge around and I start trading from the other direction. I don't take any shorts. Other traders can do whatever they want to do. Doesn't matter. I trade for range. The range pays me for the stops I will take. I have to take stops because I'm not in the business of being right. I'm in the business of trade management and statistical probabilities. I'm gaming. I'm not predicting. So I don't know. What separates this trade from this one? Nothing. This one didn't work. This is the same trade from a different location. This trade is a reversion trade. It's trying to go there. Out here, it's the same trade from a different location trying to go there. This one worked. That one didn't. Right? So and the trend is up. So now resistance, where was our selling? It was up here. So now I have to be aware. Now I have a couple of things going on. At 9:30 Central Time, something called the IB is set. Now this is the high. The IB high has a 62% probability of getting taken out, and either the first hour is high or low, a 98% probability. The ETH high, don't forget, I know you forget these things because you're distracted, almost an 80% probability. I'm trading to this, and this. So I am long only because I have something I can lean on that gives me an edge. These guys, remember this, the skew, remember that? They pull. This is taking the lid off the pot. So I can be long here, dealing with the sellers there, scale, going here. If I'm running a 3, and this is for developing traders. The stream is for developing. Now, we're all developing traders. Okay, so let's get over all that. I've been doing this 46 years. I'm a developing trader. I always will be. Keeps me going, keeps me looking and researching and coming up with ideas. And if they're decent and they're not too complex, I share them. If they're complex, I don't. Because I think simplicity, you don't need complexity. You really need simplicity. Because when you make something complex, your brain can't process it. So think about how casinos operate, because that's our proven business model. Blackjack is not a complicated game. It's 7 cards, and they do it the same way. They shuffle the deck a certain way. They cut the deck, boom, boom, boom. Isn't it always the same? They're not changing it. They have an edge. Why would you do it? So the simpler it is, the more consistent it can be. The outcome is still random, whether it's complex or simple. If it's complex, you become inconsistent. You don't have an edge then. You're gambling. So, different. Where's our resistance? Look at the liquidity. See? Where was our sellers? Now, I don't know it's going to do this. But what I do know is that I had my sellers here and here and this. So, long, having a great time, scale, next target, and then you're going for the statistics, you see? So that's a trade. What are you going to do? And then resistance. And where did the sellers take over? Here. Too high. Too high. And what is this? High volume. What, isn't that the same as that? That? Isn't that the same? Isn't that the same? Now, I don't know. Clueless. Not ignorant. I'm always going to tell you I'm clueless because I use the term clueless to relieve myself of predicting or needing to be right and getting stubborn and defending a myopic view. I have come up with these terms of self-talk to allow myself not to need to know because I accept I can't know. I do know that I had sellers and that this was resistance. Now let's look at the change. And again, I don't know. So I don't hold myself responsible for predicting anything because I can't. Can you? In hindsight, it's all very clear. But this, I have no idea. There's my resistance. So this is my area. I see my liquidity. Watch. And as far as I know, we're going to the moon. I got my statistics. I trade to statistics. So right here, buyers. So this is where the absorption is, right here. You see the seller not going down. Buyers break high. They're in control. Buyers were here. Absorption. Buyers, sellers are here. Buyers are there. Absorption. Why didn't it go down? I got a seller there, but the buyers absorbed them. All right. I got this. Going to the moon. Buyers are here. Resistance is here. I'm clueless. I don't know. I come down. Where's my buyers? They were there. So now my buyers are here. So far, looking good, Lewis. Where's my outside edge? It's here. Too high, too low. Now, right here, going north. Why wouldn't I think that? I don't know. Uh-oh, change. Watch. Now what? Where's my resistance? Isn't it there? Is everybody tracking? I'm getting a question. Would I look for shorts later in the day because it's Friday, a new all-time high? If I'm a counter trend trader, I would. But I'm not. I trade from the dominant side. I do anticipate, just like you, that we're going to get what's called responsive selling. In other words, hey, it's Friday, I'm out of here. Let me grab the purse and get out of Dodge. Resistance. Here. So what do I know? Buyers are here. Buyers are there. Right? See it? Buyers, sellers. Why did we make a new high? My buyers are here. Buyers are above the sellers. My micro structure is right here. Micro mean reversion. Too low. Buyers are above. Buyers are above. Now, how do you manage your trade? This is a good question. Here's the change. Uh-oh. Buyers are here. Now, where's my resistance? The buyers took control here in my high volume. And where did this volume come from? See if I got my brain screwed on right. Not necessarily. Here. Darn it. Come on. Get back here. This is our outside edge. This is our volume right here. Let me throw a little line in here so we can it gets kind of confusing, guys, with all these lines. Apologies, but it's the best we got, So we go down, we come up. Now remember where it's too high. It's here, and it's off of this. So when I'm coming back across the range, I know where resistance is. It's there, and it's out here. See? So it's out here. So wherever I get long, I have to remember this was the last long, right? Yes. I come across, there's the reversion, and now I'm coming across my resistance. Come on. Oh, getting delirious here. I can't remember. I'm kind of losing my place, guys. I think this was the last long, right? Help me out with this. Because I don't remember. I lost my place, so I'm sorry about that. I don't know if it was here or this other one. Both of these are longs, though, and they're both reversion trades, okay? All you're trying to do is go from here. I think this was, I don't remember. I can't remember which is which. But we're going for the first hour's high, which is this, and then for the ETH high. So I think there was another long, and then here. And then it's trade management, or you're done right here. I can't remember. Lost it. So you're saying there was another one. Okay, maybe there was. Oh, it was this one to the resistance. Trade management. Once this here, so this is your trigger. Here's your micro high volume. Okay. Break low. We're below the buyers. The volume is in here. Test. This is reversion in this smaller time frame. If I can't get above here, then I can have a short, which I don't have, or an exit, or nothing. Your call, your trade. Where's my next location? It's down here, I believe. Now we're getting, and I have the IB stat open, and I have the ETH high open. So I'm only taking longs to go there and there. It's the same trade as this, except it rotated down. I get my sweep. I have my location. Let's look. So location, going to zero, sweep. Remember the sweep. It's the same thing we used to get long at the previous location. It's right here. Sellers, absorption, sweep. Let's open it up. Location, location. So, and I don't know. But when I get the sweep and I come outside, now again, remember what my plan is. If it comes all the way down and wipes out the longs and it comes back in, I'm already know I'm going to get long. Okay. So this, and I think I posted this in the lab. I don't remember anymore. This is the trigger. Now let's isolate the trigger. This. Now again, I don't know. I'm never going to claim I know, because I will tell you I don't know, because I take stops. You got to get over it. It's overhead and cost of production. This is not a validation of your brilliance or your self-worth. I know we're wired for that, and we want it. Has nothing to do with the business. Sweep, location, outside edge, or we're coming under here. What I do is if I take a trade, which for me is a valid trade, I accept I'm going to be stopped out. When I buy the ticket, this is no different than buying a lottery ticket. I already know I'm going to lose. Okay? I accept my loss when I put the trade on. And I look at it more like a probe of a location, not as a right wrong. What is right wrong for me is not following my plan. Right for me is taking stops when I follow my plan. It is not about being right. That is an emotional, psychological need. It has nothing to do with this business. We have to change what we do, that we're not driven by our emotional needs of approval and fear. Because our goal in trading is to be able to be fearless, but not careless. So I know if I come outside and I'm way out here and I get a trigger, my job is I'm trading reversion. And again, if this trade fails and it takes out the low of the day, which is right there, I'm going to get long again. So I already know my next trade. And that can take a stop too. But even if it did, I'm profitable for the day. So here's a sweep. There's a trigger. This becomes support. And remember, I've got location. I'm not doing this in a vacuum. Previously, when we were here, this was too low. Watch. So let's come back. What's here? Stops. This is a long, right? What's under here? Stops. This is where my last long was. Well, if I come down, I'm going to take these guys out, right? That's where the sell stops are. Here's the sell stops coming out. Here's the sweep. Here's the absorption. Once, and you always got to look left. When I come under here, it's either going to keep going, or the icebergs, the passive side, are going to use the liquidity from the stops that are under here now, get long again for the rotation back. So this is a reversion trade. What we're doing is we're trading rotations. And the joy of mean reversion is where's the outside? And that is really the challenge. And then you're coming here. And then you're looking to come out the top because the statistics, you see, there's that and there's that. So this is the same trade from there, except that it hit its head on the wall here. Break here, stops, long, back to there. Where's your resistance? Isn't it there? And there. Break. And what is this thing about resistance becoming support? See? And then statistic. Trade can be done right here, and you're back in your Barca lounger. So for me, that's just the way I kind of do it. So what do we got going on here? Rotational. Here, let me get current, and then let me look at your questions. Yeah, look at that. Huh. So anyway, I don't have any shorts. I can't, what am I going to tell you about this? I have no shorts. But now the IB continuation trade is not a trade for me. So I'm not buying this. So I don't have a trade here, okay? For me, I'm not going to take this trade. Because I'm not in a trending configuration. I'm in a rotational configuration. I don't know if that makes sense. Does that make sense, guys? And the market can keep going. I don't know. But it's not my trade. I'm not going to buy this. I'm in a reversion market. That means outside in. I'm not going to buy inside out. Me. You knock yourself out. I'm patient. If the trade does not align with the context, I don't have a trade. And I do think it's quite possible it's going to make new highs. It's not my trade, so I don't take it. And this is not trade recommendations. You can trade anything you want. I mean, this can keep going. I had my sellers here, so this can keep going. Joe, my setting for mid is 50% of the high and low. That's it. There's a price line somewhere. I don't know if that's it. Price levels, here it is. Yeah, just 50%. Just there it is. Make it a color, and there you go. You can set up anything you want, and it has to reset at specific time. So RTH open, if that's what you're using it for. How are we doing in YouTube? So that's it for me so far. Now, subject to your plan, there might be other trades in here. I'm giving you what I call the broad brushstroke. I am not into, get long, get short, play this stuff. No. And it can keep going. It doesn't matter. I just wait for the trades that favor me. I'm not here to keep busy or action. And if it keeps going up, okay. Doesn't matter. I don't have a long here. I know we have a trade in the Trader Lab called the IB continuation trade. It's a long, okay? But if I'm in a rotational configuration, the IB then is just a statistic. It's not a long. Because if you were taking this mechanically, when we come out here, you would take this, and this is your resistance. What? You buy this, this is your resistance. You buy that, this is your resistance. See what I mean? I'm not taking that trade because it's not, I'm in mean reversion, which is balance. Do you guys understand this thing about context? And I'm not saying we won't go higher. What I'm saying to you is context is number one. Outside, back here, and then wherever. If I can't get long out here to come back there, I'm not getting long here to go where? And I don't know where it's going, but I don't trade inside out. I trade outside in this condition. Are you guys tracking? Does that make sense? And Joe, I hope I answered your question on that. And as far as the shorts at the end of the day, maybe. But here's the answer to what to do in the market. And again, I'm only giving an opinion. You guys do your thing. I would not take a short. I go home, or basically turn the machine off, go out, or just get in the Barca Lounger and order my pizza. I don't have a compulsion for action or to trade. My compulsion in this business is sustainability and profit. Look what I have here. These are sell sweeps. That says counter rotation. Buy sweep, counter rotation. Sell sweep. Sell sweep, counter rotation. Buy sweep, counter rotation. This says up. This says down. This says down. This says down is going up. It's not mechanical. What do I know up here? Resistance. What do I see here? Why am I not taking any longs now? I'm not at an outside edge. What does that tell me? You don't have a trade, Tom. Oh, what about my FOMO? I know it's going to go higher. Really? How do you know that? Well, how about this? I don't know. So if I don't know, and I never know, then I can only trade in alignment with the trend, which is up, and outside in because I'm in balance. That's it. No trade. Now, you may have a trade, but you have to know if it has an edge. Me, no edge here. You, maybe. Does this make sense? Please give a like if you're visiting on YouTube. If you're interested in the Trader Lab, this methodology, and being a community of like-minded traders, this is what I'm doing. The auction. How does the market work? Go to the supermarket. You already know trading. What is the what do we overlay these on? This is a chassis. You're seeing this volume. It's telling us the shopping. What time frame do you trade in? Short? Longer? What's your range? What is your risk reward? What is the condition of the market? Well, trend is up. And what else? Balance. So rotational trading. So I'm in an uptrend, and until it changes, it's only longs. And since it's a reversion market at the moment, it's outside in. It's not inside out. And then order flow helps me read the triggers and the structure in a more micro fashion. Okay? Context, guys, context. It's all about alignment, not prediction. I hope that makes sense. Also, maybe, if I can find this, let me see. No, I can't. Can I? No. This is available to all of you at no cost. These are 60 PDFs of structured trades that I've shared in the Trader Lab. There's nothing mechanical. Unfortunately, no plug and play. Wouldn't have been nice. All of us would have loved it. Joyous. Doesn't exist. The key is understanding where trades are qualified and knowing that you have an edge. The rest of the time, hang out in your Barca Lounger because then you're gambling. I think we need the gamblers, but we don't want to be the gamblers. I hope that makes some sense. Please give a like. Send this to your friends, your other traders, if you think this might be useful for them. Give a like on your way out. Review these streams. They are sequential, so if you go back, you're going to see how this story developed and how we might get in alignment and over time extract more dollars from the market, just like the casinos, than we pay to gamblers. Thanks again, guys. Appreciate your time and interest, and I look forward to seeing you on Monday. And have a great weekend. And thanks for visiting the Trader Lab.